Good morning and welcome to this Monday, October 19th, 2020 edition of Trading Places Live here at EarningsBeats. I'm Tom Bowley, Chief Market Strategist at EarningsBeats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Before we get into a whole lot with the market, we'll go through that recap with you in just a minute, but I do want to just share a couple things for those of you that are new to EarningsBeats. Always like to start off, show you a little bit about what we do, just give you a sense of some of the things you can do to maybe get an idea of our strategy and our style. At EarningsBeats, we have a free EarningsBeats Digest newsletter. Comes out Mondays, Wednesdays, and Fridays. Generally talks about relative strength, earnings, those types of topics. Had a good article in there this morning on a commercial vehicles and trucks company, and I think one of the better looking charts in the market, but you can check that out. And then if you want to join, we actually have a couple of key webinars coming out there for members only tonight and tomorrow night, but you can join us with a fully refundable $7 30-day trial. So if you click on this join today, that will take you to a page where you can then access some of the things that that we'll be doing or that we do. And again, 30 days, you pay $7 up front. We refund you the $7, so it's a no-cost trial. And you'll be able to join us for the two events that we have laid out here. So tonight, this is different for us at EarningsBeats. We've always looked at individual stocks, but we know we have members who are interested in ETFs. We have a lot of folks over at Stock Charts and some of the other places where I've written and try to share some of my knowledge about the market. But there are a lot of folks that prefer ETFs over individual stocks. So we are unveiling at 4:30 this afternoon our model ETF portfolio. And the whole idea is to try to set up an ETF or a group of ETFs that will beat the S&P 500. That's the goal. It is a little bit more challenging, I think, to beat the S&P 500 with ETFs because you don't pick all the stocks in the ETFs. You have to look at what's out there and decide, okay, this kind of fits my strategy, this doesn't, and you try to, piece together a portfolio that you're comfortable with. And so that's what we're going to be announcing today at 4:30. If you have any interest, I can tell you that our portfolios have been so much better than I could have possibly imagined when we started these. The model portfolio we started almost 2 years ago now. We've got 1 month from today, we'll mark our 2-year anniversary. Now this was as of Thursday, but I know Friday was pretty flat on the model portfolio. But in less than 2 years, we're up 169, almost 170%. The S&P over the same time frame is up 29%. That's over 2 years. And so I think we've got a pretty good track record going. All of our other portfolios are doing very well. Income portfolio slightly lower, but that one is certainly less aggressive, and it is filled with dividend payers. And whereas all these others are just simply, they're more momentum, but you're sticking with leading stocks and leading industry groups. And so we'll be applying some of those techniques to the model ETF portfolio tonight. That'll be a very interesting webinar. If you do trade ETFs, I think there are some things that you really need to be aware of in terms of some of the limitations, things that you should be expecting from your ETF portfolio. You don't control things. The ETFs change over time. What I always say with ETFs is you have to know what you own. If you're just buying an ETF because the name sounds good, and then you're buying other ETFs, you probably have no idea, but your balancing is probably way off. There's a lot of things you need to consider. Anyway, we'll be talking about some of that later today. Tomorrow, Q3 earnings. So last week we did a little sneak preview, just the first week of earnings, taking a look ahead to see what's happened or what we think is going to happen. We also looked back a couple weeks, beginning of October, to look at some of those earnings. Well, now we've got some more earnings to actually look at. The actual results are in from last week. A lot of the big Dow companies, a lot of the financials. We can go through and we're going to take a look at those. And then I'm going to give you some predictions going forward over the next few weeks. Some key earnings reports that I'm going to be watching that I think are going to come out with some really good numbers, and may throw a few in there where I think they're going to be some clunkers, just based on what Wall Street is saying, based on analyzing the charts. So Q3 earnings, that's always a popular webinar, and that's going to come on the heels of our inaugural model ETF portfolio selection process. So two really good webinars. Hope you can make them. All right, let's move on to what happened in the market on Friday. We saw a little bit of bifurcated action. You can see the Dow Jones was up 112 points. The S&P was flat. The NASDAQ was down 42. So it was, when I was writing the weekly portfolio report yesterday for our members, and I was just looking back, it was kind of a crazy week. The IWF versus IWD, which is the growth ETF versus the value ETF, that finished almost unchanged for the week. But we had a big rally in the middle of the week, and then we gave it all back by the end of the week and just kind of finished flat. And then with the bifurcated action on Friday, none of our major indices broke out, but we're all, we're close. And I think if we can hold up okay through the next week or so, this is, today's the 19th. Historically, the 19th is the worst calendar day of the month. That takes into account all the 19ths, January 19th, February 19th, March 19th, etc. If we go back to 1950 on the S&P 500, the 19th has been the worst. We could pull out Monday, October 19th, 1987. Remember Black Monday, lost 25% or whatever? We could pull that out, and the 19th would still be the worst day of the calendar month. So it's not, don't think it's just because of that one day. It does fall right around the options expiration. It's a Monday. Mondays historically do worse than the other days of the week. So we got a Monday today, but futures right now are pointing to at least a strong move at the open. We'll see whether or not that holds up throughout the day. Mid caps down slightly, small caps down a little bit more, about just under 2/3 of 1%. As far as strength, utilities and healthcare led on Friday. That's not exactly, making me pound the table, but it was one day. If we see utilities leading the market for the next 2 months and we're breaking out, that would not be a good sign. But we want wide participation. We want utilities breaking out. We want healthcare to break out. We want all the groups moving higher, but we want leadership from those aggressive areas like technology, consumer discretionary, communication services, and even industrials, now that we have the transports moving a little bit more. Energy was the worst performer on Friday. Anybody shocked? I mean, energy, look at this chart. I mean, energy just can't get out of the way of itself. Just continues to move lower. Failure occurred right at that 20-day moving average. That's not good. As far as strength in industry groups on Friday, aluminum had a pretty good day, up 2.5%, a little more than 2.5%, but still below the 50-day moving average. We did climb back up above the 20. I think we're just consolidating off of an uptrend. I suspect we're going to go higher in aluminum. I just don't know if we're going to see leadership there. And then in the oil patch, you can see right here, the DJUSOI took a pretty big hit, down more than 6% on Friday, failed right at that 20-day moving average. We've only had one close above the 20-day moving average since we dropped below it back. This would have been back in mid-August. So for the last 2 months, a little over 2 months, we've had one close, I believe, above that 20-day moving average. It was very short-lived in mid-September. And now we get up, we have another chance to rally through it, and we failed miserably on Friday. Energy just really struggling, and it remains in a void as far as I'm concerned. Okay, 10-year Treasury yield. Let's get an update, make sure we got the latest here. We're getting a little bit of a pop, up more than 2 basis points today. Not really a lot of economic news due out today. We will get the October housing market index out at 10 a.m. The expectation is 83. September was 83. And I believe the range was from 80 to 84. Now, we've seen some pretty good housing reports coming out over the past few months. And I wouldn't be surprised to see another beat here. But the range is a little bit more narrow than what we've seen in prior months. So maybe they're getting a little bit more of a handle on it. But 83 is what the market's looking for today. We'll see whether or not that is the number. If we come in higher than that, a little hotter than that, I wouldn't be surprised to see this 10-year Treasury yield move back up over 0.8%. And that would be good for the equity markets. That would give us an idea of rotation taking place. And that, in my opinion, that's going to be one of the things that fuels the market higher in the next couple months to even into 2021. I see the yields moving up. I don't see a huge move to the upside in yields. The Fed's telling us, even with inflation, they're going to keep rates low. So I don't expect any kind of a big move, but you got a lot of traders out there in bonds right now. They're seeing the stock market. If the market breaks out again, stock market breaks out again, I think you're going to see money rotating out of bonds. A lot of these managers, fund managers, and some of these financial firms going to be changing their allocations because they're going to want to participate in the stock market moving higher. When your alternative is making 0.8% in bonds, there's going to be a lot of folks that are going to say, you know what, I can do better in stocks. And so I think that rotation takes the market higher. Okay, let's move on. A couple of stocks in the news. First of all, about 2 weeks ago, I pointed out DraftKings, and the stock was up in the low 60s, and they came out with a secondary offering. And that is usually the kiss of death for an uptrending stock, because first thing they do normally is announce an offering. Then they come back usually and price the offering. So you got normally a couple of different things going against you. Current shareholders tend to sell because there's dilution. You got more shareholders out there. And sometimes it's not even the company that are selling the shares to raise money. Sometimes they just have a big shareholder that wants to get out. And so that I believe was the case with DraftKings 2 weeks ago. But we got a couple more offerings that were announced on Friday right after the market closed. So I wanted to show those to you. First one is TXG. Now, this is TXG going into last week, well, at the end of last week, where it ran from 120 up to 160 in about 3 weeks. They announced that there is a shareholder that wants to sell. So from what I could gather, TXG is not going to receive any proceeds from this offering, but instead a selling shareholder just wants to get out of a large position. And I can only imagine, I was looking at pre-market, it was not down. The stock was actually up a couple pennies, I think. But these are the types of situations for me, because I get questions a lot, when do you sell? If I own a stock and they come out with a secondary offering, I will almost immediately sell. And that's what I said with DraftKings. I just wouldn't take the chance. I said at the time, I wouldn't be surprised to see it maybe pull back all the way to the mid 40s to 50. And we went down just below that 20-day. Looked like we were trying to recover, couldn't get through the 20, and went back to the 50-day. I actually think DraftKings, and I said this last week when it was probably a little higher, maybe in the upper 40s to around 50. But I think DraftKings, the reward to risk is starting to improve. I actually like the stock. And I think I said last week I'd like it down to the 50-day, and that's about where we closed on Friday. We'll see if we can get a reversal here. First thing I'd be looking for is putting in a higher intraday high. We've been, for the most part, just downtrending for about 7 or 8, 9 days. So let's get something that looks like a reversal. But TXG was one. The other one, and I mentioned this last week, I would have never bought it. It had some good news. I don't even remember what the news was, but you can see the volume picking up. The problem I had with the stock was that, excuse me, what I had a problem with was the volume. I mean, if you go back and look at this volume, that's 500,000 share level. We're talking about a $4 stock. So we're not talking, if you're trading, let me see what what the volume is on some of these days. Here's a day traded 23,000 shares. So if a stock's trading for $4 and it only trades 23,000 shares, you're talking about 92,000 in dollar volume. That is incredibly low. So there's no chance that I would ever trade a stock like this. But anyway, I just wanted to point it out because it was in the news. They filed a secondary offering. The other thing I've said recently is that if you're a company and you're going to file a secondary offering, best time to do it is after you've made a move to the upside, because you can get more money for issuing less shares. So rarely do you see companies come out after going down for many months, unless they're really desperate. I would view a company as being desperate for cash if after a downtrend they're trying to raise cash. Normally it's after a big move to the upside when they want to raise cash. Now, as I mentioned, TXG is not, I think that was just for a selling shareholder, but normally that still carries bearish um, connotations. I'd be a little nervous holding this stock right now after the huge run it's made here in October, given that there was an announcement for a secondary offering. All right, let's move on to talking technically. I wanted to talk about a couple of areas, and I'm going to talk more about these areas tonight during that ETF, mono ETF portfolio, because I think some of this is pretty important in trying to determine, how you want to shape your portfolio and the strategy that goes into it. One thing that's common between setting up a model ETF portfolio and just setting up these other portfolios that have individual stocks in them is I'm looking for relative strength. That's a common denominator in almost anything I do with the stock market. I think you need relative strength. You need areas of the market that Wall Street's favoring. One of those areas has been home builders. And with rates still incredibly low, home builders have been breaking out, moving to new highs. Their accumulation distribution line's been going up. And here's the relative strength. And this is the one that really tells you. Sometimes you look at a chart, a price chart, and you think, wow, this is a great area of the market. I should be in this. And then you pull up the relative strength and you see you're really not outperforming the S&P. In fact, sometimes your relative strength line is even going down. So price might be going up, but it's not keeping up with the S&P 500. So you really need to pay attention to this relative strength. The XHB versus the S&P 500 has been rising since April. So not only are we going higher, but this is a group that's been leading. So the XHB is an ETF that I certainly would want to consider, at least for the ETF portfolio. Another one I think is really important is IYT. And when I look at IYT, I see, no, how the heck did that happen? All right, that's just weird. Let's try a different way. There we go. I don't know why that wouldn't come up. Now I got to change my settings down here again, so bear with me for a second. Because I want to take a look at it versus the S&P 500. But this is the iShares Transportation. And set that to a solid line and then get this height. All right, I think we're good to go. All right, so here you've got the IYT heading higher, PPO staying above the center line. That's nice. Accumulation distribution staying near its high. And then you've got relative to the S&P 500, you got leadership. Transports have been leading the S&P since May. So not all the way at the bottom. This was an example of a group moving higher back in March and April, and its relative strength actually getting worse. So you might look at this and say, wow, this is a really good group. I'm going to jump into some transports, when in fact, it continued moving lower. So if you got in at any of these points, you would have ended up losing versus the S&P for at least the next, few weeks or couple months. But since that May low, this move to the upside is not only strong on an absolute basis, but it's also strong on a relative basis. So once again, the IYT is something to consider. Now, the IYT, the other thing I'll mention about this is that you have very few airlines. I know in the top 10 holdings, when I looked at the top 10 holdings on this, they were all truckers and they were truckers, they were railroads, there was transportation services, there was delivery services, those types of companies, which are doing much better than the airlines. There was another transportation ETF that I was looking at that had a lot of exposure to airlines. So you really you can't just look at it and say transports. You've got to look under the surface. You got to check out the holdings and see if you're comfortable with what's in the ETF. And then, to be honest, you really need to be checking it pretty often, because an ETF, you're not controlling whether or not the ETF decides to sell or to rebalance. So it's always worthwhile to go back and take a look at your holdings in the ETFs. I would do it at least once a week. All right. What else can we look at here? How about the renewables? Now we could look at, how about we just pull up TAN, TAN. This is the ETF. So this is a solar ETF. And once again, nice move to the upside, and look at the relative strength in renewable energy. So if you're looking for ETFs to beat the S&P 500, I mean, as long as this one was trending higher in relative strength, TAN was a great, ETF to own. Now it went up a lot here in the last month. I mean, we're talking about from 55 to almost 75 just in the last 3 or 4 weeks. That's a lot. Could it pull back? Of course, it could pull back, but this is an area that Wall Street is clearly favoring and something we need to be aware of. How about retail, XRT? I mean, look at the XRT moving up. And since April, retail has been leading the S&P 500, the XRT. Just recently broke out to a new 52-week high. I don't know if you knew that, but if you're setting up portfolio of ETFs, something you probably should know. And then let's see, another one kind of like TAN. This is clean energy, PBW. But look, once again, look at the relative strength. Now, there was another one, I think PBW, and I forget, there was another energy, clean energy ETF. I can't think of it now, but PBW outperformed it and has been outperforming it for the most part for the last few years. So you want to, when you look at your ETFs, not only do you want to know what you own, but you also want to just kind of compare relative strength of some of these ETFs, because some do better than others. Some have different expense ratios. That's another thing with ETFs you got to be aware of. How much is the ETF? How much of your money is going toward expenses? You don't have that when you get into individual stocks. Another reason why I like to pick stocks and go with those portfolios. But ETFs do give you a little bit more diversification. For that reason, it's harder to outperform the S&P 500 because you're not just sticking with leaders, you're sticking with everything that's in the ETF. And even if you look at the top holdings and you like most of the top holdings, you may not like them all. They might not all be leaders. So there's a balance. And you have to decide, do I want to be in individual stocks? Do I want to be in ETFs? But if you're going to be in ETFs, you need to know what you own. That's really critical. And we'll talk a lot more about that later. All right, let's take a look at chart lists. So let's go over to, and this is what we do for our members as well. If you sign up for a 30-day trial, not only are you going to get the 2 webinars that I talked about the next 2 days, but these chart lists, if you're a Stock Charts Extra or Pro member, you can download these chart lists right into your account. So let's go into the strong earnings chart list here. And I like to go into the view all and then go into the summary, so I can see quickly what was working. And you can see CIT had a huge day on Friday, up 26%. This is just one day, intraday. We can go back and look at the week if you want. So you got a lot of flexibility here. NEO up 32%, Cloudflare up 26%. Both these stocks are in our portfolios. So those were both really good stocks for us. Bed Bath & Beyond, this one's on our short squeeze chart list, making a big move, up 15.73% last week. Jinko Solar, I don't even know what to say about that stock anymore. It's been just parabolic. But anyway, let's go back to that intraday. And so sometimes what I like to do is just take a look at some of these that are making big moves. The other thing is you can sort it in scooter order. So this is the Stock Charts technical rank. And then maybe look for something that's down lower, maybe around the 70s, that's had a good move. That's at CIT. But maybe take a look at, I know that Jack, this is in the restaurant group. Let's see, it made a little bit of a move. Well, trying to make a breakout. I mean, I would certainly watch that 89 area. We're at 87 and change. So it's just doing a lot of the work for you. This entire list, if it's on the strong earnings chart list, it means that the last time they reported earnings, they beat top line, they beat bottom line. You know that already. If you see a stock on our strong earnings chart list, they've beaten top and bottom line. That's why they're here. That and the fact that I like them technically, or I like their group technically. And they're also liquid. So you don't have to worry about that. Let's see, what else can we talk about here before we go into the earnings? Tell you, let's look at that short squeeze chart list. So if we sort it by percentage, you can see Hertz was up 142% on Friday, from $1 up to $2.50. That'll get shorts attention, but you can see we've seen some of these moves before, and they don't last. I like to get a stock that's showing relative strength and that's also in a strong group. So for instance, like this AMC, I would not be particularly interested. It's been in this downtrend, had a good day on Friday, but I mean, I think the shorts are getting this one right. So I'm not a big fan here. But look at BGFV. Okay, now this one's been trending higher for a while. It's got 27. It's in the title. I will always put the short percentage of float in the title so that you quickly know how much that short position is. Anything over 20% is high. And this entire chart list has those stocks over 20%. There's 72 of them. So, and there's probably only maybe 15 that I would consider trading. Most stocks that are heavily shorted are going down. They're in downtrends, and the shorts are getting it right. But you want to be aware when they get it wrong, because they are going to have to flood through the little door in the corner. You know, I always kind of use the analogy like you're in this big conference room or something, you know, and you've only got one exit. It's this one little tiny door in the corner, and the whole conference room or the auditorium is filled with shorts, and you get a breakout. It's like, okay, who can get to that little door in the corner the fastest, because everybody's going to be heading for it. And when you see a stock like BGFV, Big Five Sporting Goods, not only is it moving up on heavy volume, triggering short covering, but if I pull up this relative strength chart, it is in the specialty retail group, which just broke out. Look at the strength in this stock relative to its peers. It's in one of the strongest areas of the market. Here's specialty retail versus the S&P, and it's one of the best stocks within specialty retail. Now you've got something going with a short squeeze. And so the shorts have just been, you know, a lot of pressure. Another stock that has had a really good time has been GME, which is I don't even know how you get 141%, but I've seen numbers all over the place on this stock, but it's the most heavily shorted stock. And look at what's going on here with the volume. I mean, you talk about, I'm not even sure. I think it's like one of those little pet doors in the auditorium that everybody's trying to squeeze out of, because this thing is just, you know, I wrote about it back right around earnings time, because the short percentage of float was so high. I wrote an article. I can't remember if it might have been in my Trading Places blog, or maybe it was our free newsletter, the EB Digest. But I wrote somewhere that this could be the mother of all short squeezes. And look what the stock is doing. I mean, that was back. I was looking to see if it would get through 8. Well, it went through 8, and it's gone through 15 in a month. So it's almost doubled in a month. That's what happens if you have this information and knowledge, and then you start to see these breakouts. So our short squeeze chart list available for download for all of our members. Combining what Stock Charts does with what we do is really lethal, very powerful. And I think our portfolios show it. I think our chart lists show it. Just give you a lot of opportunities to benefit. And we have a daily market report where I try to provide my guidance in the overall market, which I'm very bullish. All right, let's move on. Earnings. So I'm going to pull up a couple of companies that reported earlier this morning. One is Halliburton. Halliburton came out. They beat on their bottom line, 11 cents versus 8 cents, but they missed on their top line. Stock was down a little bit in pre-market action. And when you look at this and pull it up on a relative basis, this has just not been a good stock. Relative to its peers, it's not doing badly, but the problem is the peers are just horrible. So it's struggling against the S&P 500. We'll see whether or not it can hold on to this relative support level after its earnings, but I didn't like that revenue miss. Lennox, LII, also reported. They actually came out with some pretty good numbers. They beat on their bottom line, 353 versus 313. Stock was up in pre-market. We'll see whether or not that holds, but you've got a group that's strong. This hasn't been a great performer versus its group, but unlike Halliburton, this is a good group. So I'd rather have a good earnings report in a good group than a bad one in a bad group. And that's the difference between the two today. Let's see. How about we go into the 3 you must see, and let's wrap this thing up. What I wanted to do with the 3 you must see today, I thought what we'd do is just go back to the dashboard, and they changed it on me. I had the top down here, but the market just opened. I don't have anything showing just yet. So now I'm stuck here. Let me think what we can come up with. I'll tell you what, for the 3 you must see, let's go in and take a look at one of our chart lists. Let's use the strong future earnings chart list. This is a chart list that these companies look really good in terms of relative strength. They've performed pretty well. They meet certain criteria. We run a scan to get these, but then we make sure that they're not already on the strong earnings chart list. So strong future earnings means they're not on the current strong earnings, but they could deliver some strong results based on the way they're trading. Now I'm going to do this view all and summary intraday, and I'm going to take whatever the 3 worst performers were from Friday. We'll take a look at those. How's that? So DBD, let's pull up Diebold for the 3 you must see. Actually, nice overhit resistance here at 9. I really want to get this breakout over 9. Stock's been moving higher. I think your key support, you've got gap support, gapped up on good volume at the end of July. That's held now a couple of times. So I think you need to hold about that 680, 690 area, but look for a breakout over 9. Next up on the list, Kodak. Oh, this is the one that went absolutely crazy back in July. I would not touch this thing. I think it's just so volatile. I see nothing here that would interest me, to be honest. Watch the support here. It comes in, it looks like maybe around $8. I wouldn't want to trade below that. Otherwise, you could probably fill this gap back to a little above 6. To the upside, you got some resistance now around 12. That's a really tough one to gauge, though. And then the last one, the Container Store, 98 on the scooters. Yep, really nice looking chart. I think a 20-day test would be great entry on the stock. I mean, it's gone now from 375 up to 9.5 in a little over a month, maybe 5 weeks, 5-6 weeks. Huge move. Great volume coming in, though. I would actually, you've got some recent lows coming in just above 8, and the 20-day EMA is at 796. So I think as you get closer down to that 810 area on any kind of a pullback, I think Container Store looks pretty interesting there. All right, going to go ahead and wrap it up. Again, just want to remind everybody, big webinar this afternoon, Model ETF Portfolio. This is new for us. Really excited to announce the ETFs that we're drafting. I always call it draft day because it's like the draft, except it's even better than the draft because nobody's competing against us. We can draft any ETF we want. Just like with our regular portfolios, we can draft any stock we want. So it's like having a bunch of #1 draft picks. But anyhow, Model ETF Portfolio coming up at 4:30 today. I hope you can make it. If you're not a member, click on this join today. Take your trial membership. I think it would be a really good learning experience. Maybe take a look at how we do things. I'm not saying you should change everything you're doing in the market, but I do believe we will help and maybe add something to your trading arsenal. So hopefully see you at 4:30 later today. All right, that's it. Everybody have a great day. Happy trading. See you tomorrow.